Hey guys, welcome back to another day of analysis. I'm just going to be waiting for approximately 10 minutes just to let people slowly trickle in, and then we'll get started. We have 4 people at the moment, which is it's actually, I think, quite a lot of people considering we're 10 minutes early. Good evening, Jack. How are you doing? What time do you sleep, Jack? Cause do you trade London? Hey Ali. Hey Maui. Yeah, welcome to the streams. We have 5 views and 5 likes. Yeah, you like it? Yeah, I think the journal, I don't know what, like, we'll have to see what we can do with it. Like, there are elements of it that will need changing over time. I think I might add more columns in detail analysis, just because I really want to understand with our trades, right? Like, I want to understand, have a good understanding of stop loss, and with that, it's like, what is the best, like, optimal stop loss to use? And I know we have like these, right? But it's like something to record what the stop loss actually needed to be for the position. So I was probably going to go into price action scenario. So I had something there, and then you can kind of see like what your stop loss needed to be in terms of like pips, or potentially I would say it's not really a pips information thing. It's probably like what level it needed to be at. So I'll add that, but yeah. We'll see. There's a bunch of things to do. Yeah, it's not that bad. Like once you kind of get into it, like you'll understand that actually it provides a lot of value in terms of like making sure you trade properly, and then just over time, right? Like you only have 3 trades on there, but it's fine. Like once you get like hundreds of trades on there, it's gonna start making sense. Like for me, I know that like I've taken so many trades now. I've taken like 80 odd trades in about a month and a bit, so starting September 1st, and just since then I already have like a pretty accurate view of like my win rate, what time frames I kind of align myself on and stuff. Nah, bougie, we're just in here just to chill for another like 7 minutes, just to get more people in here, and then we'll start at 11. Yeah. Yo, Keel, Mimi. Oh, we got 10 people here already. 10 people who are 10 minutes early with 10 likes on the streams. Did you guys all take Don's position today? I think it was a sell here, right? Yeah. It's a clean trade, right? I buy because we're breaking out, right? Surprised it didn't drive up further, but I guess that just means that this fake out wasn't really a fake out, it was respecting. So then you had this, right? Then you had this, but then once you broke out here, I guess it filled the range, right? It filled the range up to here, and that's all it kind of went to. Yeah, it was so fast. I was actually at work, so I don't trade Tuesdays most recently because I have work, but I actually had my best day so far today. I made like around 1% today. Yeah, he said buy, and then like the candle just flew. Yeah, but full TP at 18, 19. Yeah, like I haven't changed my charts since yesterday's analysis, right? Because I didn't trade Tuesday, but like look at this: sells wicks around here, buys wicks around here. You would have made money coming down. You would have made money going up. Yeah, buys around 1821. These sorts of areas, they're good as well. You know, you're understanding this potential wick around here. Yeah, when it wicked down, so you caught the sell the buys back in, right? Don's closed with. You sold once it hit 1833. Yeah, exactly our analysis yesterday. So, who took the analysis yesterday and actually put it into plan? Like who was in the streams yesterday? We drew up these levels, and who actually sold here and bought here. Oh yeah, did it actually? I guess what was it 19? Yeah, it filled here, I guess, right? But we're also understanding that if price wants to continue pushing down, it needs liquidity, right? You could have said this is likely liquidity, but I wouldn't say this is enough liquidity to drive like down to 1803 sort of areas. So, oh, you caught both. Damn. Yeah, but that's just the power of Don's analysis, right? It's like it's my analysis, but at the same time, it's also Don's concepts, and like we're building on top of it. We're seeing how we can improve on it, right? Yeah, I don't know. I guess like this was enough for Asian volume. Like what is this? That is liquidity. Like that's nuts, man. But I guess you could also say that like, so this is kind of something I've been taking on like the 1 minute quite a lot, which is you have a low, right? You create like some sort of high, you range, you come down, you actually break the lows in terms of some like closures multiple times. And it doesn't matter. So it doesn't matter if you have like no bottom wick for this candle, because if the next candle actually comes, fills the range, right? You actually can just combine these two candles so that this actually has a bottom wick. Then essentially it's broken below, so we know structure is now bearish, right? Come up, creating that top wick. You could have potentially gotten sells around here, and then this was just a fake out, right? You've actually closed below this range, and it's just faking out again, right? You've closed back into this range. This is a fake out, and this is a second fake out to come back down. I've seen second fake outs happen quite a lot, and then once you kind of cleared this entire thing, honestly, you could have gotten buys around here. 1821. What does it look like? 1821 on the. Let's have a look. 1821. Yeah, like around these sorts of areas, right? 1821 8. If you took these, like for that initial quick rejection up, you would have made pips. You would been in like a little bit of drawdown, right? But if you go back to the 15, you'd have tapped here. 27, so 21, that's like 60 pips. So yeah, man, it's pretty nuts. I'll take credit. I'll start taking like proper credit though once I'm like fully profitable. And like I think for me, what fully profitable means is like I can trade for about half a year, and I've been profitable or break even every single month and every single week. But until that happens, I wouldn't like. There's like a issue with me kind of joining this industry very very late. Sorry, not very late, but like I've only joined for a couple months, right? This is like my sixth month now. So I started in March. So like a part of me is like, oh okay, so I've only been here half a year. Do I really understand everything, or am I just like understanding half of it and I'm just getting like, I don't know if I'm lucky, but like I guess I understand part of it enough to make money, but is that enough in terms of like a full understanding of the markets, right? But cool. Right, so it is now 11 p.m. So welcome back. We're gonna do this analysis. It's gonna be a quick one, about half an hour, 40 minutes. So a job. I say quick, but analysis takes a while. Just to kind of emphasize, yes, this was yesterday's analysis, right? What happened yesterday? This was Asian, right? Apparently Asian just kind of started driving down. You could have caught these potentially, but if you didn't, I would say these levels probably would apply to New York as well. If you start ranging in between these areas, right? If quick spikes up, quick spikes down, you had this. This is the 15-minute chart, right? But in general, you had pretty bullish structure here. I would say you didn't break the highs, but you're respecting this range, right? You closed, below, I would say here, faked out, went back up. So at that point, you've confirmed this is a very bullish trend, right? So once you came down, looking for those buys around these sorts of areas, right? Took a buy around here, 21 sorts of areas, I think. Where's my buy? Yeah, somewhere around here. But I took the buy there to retest exactly this wick here. So I got into like the very tip of this wick, and then it retraced a little bit. Did get into another buy, but understanding that this is price action, and I was surprised that this didn't push up further. But these played out, right? So let's remove all this. Let's go to the monthly. Monthly is key. So what is the monthly doing, right? Monthly, why do we have 1821? Because we had these sorts of levels around here, potentially even down to like these sorts of areas. This entire range here is a buy zone, potentially, right? Because you've now filled the range. See, like your price kind of filled here. I would say this is probably your range now, because your price tapped here, and now you're like kind of rejecting a little bit on the monthly. So at any point, this could be it. You've filled the range, and now price is likely going to need some liquidity, higher time frame liquidity before you're able to drive down. Why do we see that, right? Number one, we have a range fill. A range fill means that if you're on a 5 minute and you have this, right? If you come down, you'll very likely retest the top of the range, right? So does that mean we're going to retest up to here? Not necessarily, right? Because it's the monthly time and these ranges are huge, right? But we also need to understand that for price to continue driving down, it's very likely that we're going to see this first and then a push down. So this push here, right? This is what we're looking for to catch, right? So if you're in a buy here, to be honest, it wouldn't even be that bad. I wouldn't take a buy immediately because of the monthly time frame, right? But because you can't have a stop down all the way to around these areas for like 200 pips, right? You can't do that. So with this, I would say you're looking for this rejection, but you're also looking for these bearish momentum sells. And it just so happens that this level where it potentially would reject at is exactly here at 1815 sorts of areas. And we'll define this more in the lower time frames, but just understand that that's the kind of ranges we're playing. Price in terms of the monthly candle is very likely to come up to create that top wick. So how is that going to happen? Let's drop down to the weekly. Weekly, I would say it actually hasn't filled the range yet. I'd say it actually needs to come slightly lower, towards around these levels potentially. I prefer this a little bit more. Might be slightly higher actually. I'm gonna put this. Yeah, this is a weekly. It doesn't matter too much, right? I'll say around here. I'd say it's very likely that you're gonna tap 1804.9, so around 18.5 sorts of areas. Why? Looking at these. Looking at these wicks here. Like I'm looking at specific wicks, right? But I'm also looking at like the medium of all of these wicks. Sorry about that. But once you kind of tap these areas, you're looking for that rejection. So what is this like? I understand this is the weekly candle. At any given point, right, price will drive down, and this is like 200 pips, right? So if price drives all the way down to here, we need to look at the smaller time frame to see if there is a change of structure, or potentially if there's any indication that price is going to continue, likely, right? So I'd say you also have like a bit of structure around here. So if price is tapped here, we could be looking to grab liquidities. Grab liquidity around, I'd say what was the range above here? I'll say the range above here is here, right? You close below, drive, respect, drive, respect, drive, fake out, drive down, close below here, you fill the range down to about here. You close in below here, you filled to around here. So I would say 1805 is definitely going to get tapped. And then your next kind of area that you're looking to get tapped is around 1786, right? So just keep those in mind. Let's look for top wicks on the weekly. every time it drove down, these obviously respected, so it didn't come from above, but every time it drove down, where did we get these kind of wicks at? I'm looking at, these here, these fake out wicks. I'm looking at potentially these ones or even these ones here. So highlight these sorts of areas. Understanding that this created a top wick here, right? He closed below, celery, come straight down. So I'm looking for potential positions at around here. and I'm understanding that this is on the smaller time frame, that's the top of the range. And if that happens, right, you're going to create a weekly top wick. You might even come push further up. You might tap around 1872 sorts of areas. And if you do, if you're trading the weekly time frame swings, this is likely going to be what you're tapping for that weekly top wick, and then your next weeks will continue bearish. So if we understand this for the weekly, let's drop down to the daily. Daily closed bearish, right? Bearish. You haven't filled the range. This is quite a good daily range as well. I would say price needs to fill the range towards around these sorts of areas. I'm going to move this down slightly, so it's at the very bottom of this, but it also meets the top of these, right? This, because what do I understand here, right? I understand that this is just a range. So it filled the range, came down, filled the range again, filled the range, and all that. So this is the top of the range and the bottom of the range between here. So I'm looking at price getting down to these sorts of areas, but I'm looking at where it grabbed liquidity last time I did that, right? So once you got a closure below here, right, what are you looking for in the daily? Looking for this, yeah, and if not, you're potentially looking for this. So this could be a pineapple position, right? If you're trading the daily, right? If not, you get this. Could be looking at these wicks here. So I'm going to get rid of these. Get rid of these. You had a closure here. This was very high up, so again, these areas are still interesting, but it's difficult to trade that, right? It's a little bit high. So I'm looking at these as well. All of these. What else am I looking at? These I'm less interested in because I just have these sorts of areas. Less interested because it's going up, right? And this just drove down from the entire range, so we can't really take anything. So if we just take it, if we just zoom out a little bit, what is the kind of general areas, right? We have one level around here, and we have another level around these sorts of areas. Let's say your average is around here. I want to have the level so that it's at the top of the range, the very, very top of the range that I know will get filled. And I'm liking this, right? I'm liking these sorts of areas because you're tapping here exactly where the wick is, and you're respecting, and look at this, you're respecting certain things here as well. So if you get a top wick, let's say tapping into these areas, maybe slightly lower, I would say the range is, if you draw like a box, right, I would say it would be this. This is your kind of zone you're looking to tap. Anywhere within there, I'm happy with, right? And then, what are we going to target, right? Understanding that, oh, price actually could have tapped here already, right? But because it rejected and then it's tapping up there, we need to look at the smaller time frame because we don't have enough details. Which happened first? Did price create this top wick and then start flipping? Or did it come down and then start going up? The 4 hour, the daily doesn't give you enough, so let's go to the 4 hour. But firstly, I'm going to get rid of all of my levels. I'm going to mark out some key levels. So we have a pretty key level around these sorts of areas where you're closing below. And I'm going to mark up this. Actually, this is your top of the range for the daily. And I'm just going to do this. So I'm interested in this, number one, and I'm interested in, I would say, this. Oops. This. Cool. Let's drop to the floor. The floor with the 4 hour, we're ranging, right? It looks like we've come down first, done this, right? Gone up. Now you're coming down, right? So that's what's happening. This is still bearish structure, right? You also grab some liquidity towards around these sorts of areas. You broke a lot of these 4 hour highs. So if price just starts driving down, I wouldn't be surprised, right? I literally would not be surprised. So let's mark up the 4-hour zones, right? So we have this. What is this in terms of the areas that we're interested in? Cool. I see that this is a support, exactly at the support level at 1819. I think we had this marked up yesterday as well, right? So if we're here, there's a high chance that price is going to retest these sorts of highs before it has enough liquidity to come down. Understanding that currently we're in a range between 31 and 19. So what was the last time we ranged in this sort of area, right? In here, we kind of ranged here, but then we kind of drove all the way back up after testing at 1819. So since we've already tapped 1819, we could be going up, right? So I can't necessarily get sells here. If we're looking to mirror this potentially, right, it needs to tap down to 1819, but it also taps 1831. So it could be a sell just all the way down to these sorts of areas. So that's what I mean when I say price does have enough short-term liquidity to start driving down. What's your next zone? Let's draw that out as well. So you have like something minor here, and I would say your next zone is around here. So I'm gonna move this slightly lower, so it's about here. So what does this show us, right? Every time price closed below here, we're in this range at the moment. So if we do get a closure below 1819, cool, we'll look for some sells, and we'll look for some sells for the last time, like where it kind of drove. And I'm looking at these sorts of areas, right? If we look at the other box that we're interested in, every time we got a closure below here, we drove towards these sorts of areas, right? We drove from those sorts of areas. So I'm going to mark this up as this, which is potentially the top of my range, right? That's just all I do. So 1828. What does that look like for the area I'm interested in here? Cool, right? It's similar to these sorts of areas. So understanding that in terms of more local price, this could have been a fake out. These could have been fake outs, right? Or fake outs on like the higher time frame, but just range fills on the lower time frame. So I'm looking to take a sell here at 1826, right? But that's if price breaks below 1819. At the moment, I don't have any sells. I don't have any buys. I don't have any sells marked up because I don't know if it's going to tap 31 because it's already tapped 31 once. It's also tapped 1819. So if it does grab liquidity, the only area I can look for sells is around here. And let's mark this up in terms of our range. What does this look like? This is a little bit messy, to be honest. I'm gonna put this. This is relatively clean. So 1844, and I appreciate this is very, very high up, right? So what does 1844? I'm gonna mark this up as an actual sell. So what does 1844 look like on the daily and on the weekly, right? Because we need to make sure this makes sense, right? So on the daily, 1844 is coming up, right? If you are coming up, it's highly likely that you're going to create that top wick for the weekly. So sells here might not be valid, right? If you're creating structure that's just bullish all the way up to here, taking a sell here doesn't make sense because you're very close to the top wick for the weekly. And if you create that top wick for the weekly, it's likely that what price is showing is that it could come up all the way to around 1886, these sorts of areas, 1877 sorts of areas before coming down. So a sell here, understanding that if it does get there, it's going to do something like this, right? Most of the time, I would say you're only targeting this move, this tiny move before this, right? So if we zoom into here, if price gets into this, you are looking for this move here. And if you don't get into this move, you're looking to exit break even here, either once, or you have a second opportunity here. So there's many chances, like you can either take your 10 pips or 20 pips, whatever this is, or you can wait to see if it continues to drive. If it does, cool, you're fine, right? But if it starts pushing up, breaking these weekly, creating this weekly top wick, you can expect it to retest and then come up, and I would be looking to get out at break even. So these are conditional, right? These are very conditional sells. Cool. Let's look at potential buys, right? So we're understanding we're in 1819. I'm gonna say this is less of a level on the 1 hour, so I'm going to remove it for now. And I'm going to look at what price did around these sorts of areas. Yeah, it's not too bad. Okay, so again, why am I marking up this level, right? Like I just marked it based off of this, right? I marked it up based off of these, but it makes sense towards here, right? I literally marked it off and like it makes sense completely towards these sorts of areas as well, right? Why? Because it's just the top of your 1 hour range. I'm understanding that in terms of the range here, you know, we have some things that we're respecting. These wicks are respecting these, right? But it didn't drive, you faked out to come back up. You're respecting here. You have some level of kind of like small rejection there. So if that's the case, right, we're in a zone between, let's see what 1826 looks like in the current time. So here, see, you had a fake out to come back in. You're likely going to fill the range. So let's identify what this looks like. So did I mark out 1820? Was that where I marked up? Yeah, 1820, right? So if you're, so what is that? Let's mark out on the 1 hour what this looks like as well. This is kind of a more weird one. I'm not too sure about 1815. It's gonna have to be lower, unfortunately. So around these sorts of areas, cool. If this is our range, actually no. This. It's okay, I'm gonna put it here. I'm gonna put it here at 1813. Understanding that this is the hourly, so there will be smaller ranges in between. I might have to adjust it a little bit based on this, so like ever so slightly. So cool. So since you're in a range between 1826 and 1820, right, on the 1 hour, we're understanding that we're in this range here. And if we're in this range here, what am I looking for in terms of a buy, right? I'm looking at for potentially tapping of these sorts of areas to get positions to retest the highs at 826. What does 17 look like? In terms of this, it doesn't really make too much sense, right? Because you haven't really ranged in these sorts of areas. Let's continue further back. This is another area we're interested in. Cool, look at this, right? You're ranging in this area. You grab liquidity here and you're looking to push down, but you also grab liquidity towards these sorts of areas. I would say that I would potentially have a first position here, and then if price looks like it's respecting this on the lower time frame at around 1811, let's have a look at this and see what this looks like. Yeah, bottom of this looks pretty good, man. 1811.116. I will have a second buy here, but understanding that, cool, I'm gonna break this candle down. This is the hourly, right? Let's go to the 15. So there's 4 candles in that hourly candle. Oh, wait, did I go too far back? No, I didn't. Giving away too much, man. It's not about giving. I don't even have enough candles to show you guys. But let's have a look at this, right? So this is this what I'm interested in? Is it this? No, it's not. It is even further back. It's like the small, yeah, look at this. Right? On the 50, okay, this is on 30, but let's actually do this. I'm going to replay here. Jump to the 5. I don't have data, never mind. But you will see a range going down. So what you see here in terms of the hourly bottom wick, right? You're going to see a fake out likely, you know, you tapped into these areas, you faked out to start coming back up on the 5, potentially on the 1. But you tap these areas, and this is the bottom of your range. I would say probably around, I'll take this more extreme, because if it does, like, you don't want to take another pineapple too close to your initial entry, because then you don't have many advantage points. And your stop loss, I would honestly say, is going to go down around here, 1806. So your first position stop loss is around, say around like 66 pips, and your second position stop loss is around 45. So I think these are those are the buys. But then, right, this all has to come together. You have to understand, right? Price has already tapped this. So what did we mention just now on the 4 hour? Once it's tapped 1831, oops. Once it's tapped 1831, last time I did that, right here, right? What did it do? It just filled down to here. Cool. If you're getting a buy at these ranges, your stop loss is fine, right? Your stop loss at 60 something pips. You know, you might need to put it at 90 pips, right? In line with, you know, our kind of 100 pip stop loss or something. So what I would do is essentially I would take a first position at 1813. I'd be more careful about the 1811, and I might be looking for such 1809, 1807 sorts of areas, depending on price structure, right? If it just pushes down, this is the 4 hour, so drop down to 1 hour, you'll see it's pushing, it's creating structure. So even if you took those buys, say I got into a buy here, right? I would have exited at this. Once I saw that this broke, then my next candle up, I would have taken 20 pips here, right? And then I wouldn't take another trade until I see this structure forming. I see 1807 being respected, right? You're breaking, you're creating these higher highs. Be looking for this fake out right here. So there's more than one entry, right? This is just a guideline for what price is going to tap before making a decision. It's definitely going to tap 1807. Once we get there, we will make more of a decision in terms of price. But at the moment, with what price is looking like and this kind of overall fake out, I would say, you know, you'll need a little bit more liquidity potentially towards around these sorts of areas. So what you're going to see is, you know, you've come down, you're doing this, you've come up a little bit, but you're now breaking lows, right? You've broken lows with this, you're breaking lows in terms of closures with here. If you close above, right, you're still here. I would say so it's not going to come much further, and it's going to start driving down. And with this, you know, you could tap 1807, you could start rejecting, but I would so if I was to get a buy around these areas, I would need price to close respecting 17. Let's see what 17.2 looks like. Just looking at where that range is, right? So what does it need to respect? I'm going to say it needs to respect here. If it respects 1816.5, just noticing that, right? Like all of these on the 5 as well. What is that? This is a fake out on the 5 to come back up. I would say 1530 and all of these align. So if I draw another line, see what this looks like on the 30. Actually, let's go down to the 15. So 1817.02. What does this look like? So this is the kind of analysis I do every day. How do I not have enough candles? Bruh. Okay, 1817.2. What does that look like? It looks perfect, right? It looks like a fantastic area. Like you had a fake out to come back up. Cool, right? If price respects 1817 on basically all time frames, 15, 30, and hourly, even 4 hourly, but 4 hourly I would ideally not want it to break these lows in terms of a closure. If it respects all of that and then it wicks into here, 1813, I'll have a buy. But I'm also understanding that what we just saw, right, if it's respecting all of that, you could get buys slightly earlier, you could get buys around these sorts of areas. So it just depends on price. It really very much depends on price. So, and this is just a guideline for I don't think it's going to happen in Asian. I think Asian's going to range a little bit. You're not going to get too much movement, but yeah, you know, 4 hour doesn't have a bottom wick, it could flip. Hourly is looking like a fake out, so then you have conflicting information, right? Your 30 is also looking like it's faking out. Your 15 is also looking like it's already faked out, right? You're still kind of respecting this sort of zone, so you could start driving down. So right now in this zone, because it's ranging pretty hard, you don't have any confluence of all the time frames. Once you get to these sorts of areas, you're respecting 1817, right? Then at that point you can say, okay, cool, it's likely to fill the range at least up to here for about 30 pips. So we'll be looking to trade this. Cool, I'm going to start looking at questions. in terms of analysis, I only have buys at the moment. Sells, it's difficult unless you start breaking these, so it's gonna have to be around these sorts of areas, depending on price. I would say, let's look at this, right? So say price is respecting here, it's doing this. How do you know it's just not going to continue going up, right? Until, if this continues going up and then it's respecting some level in between these sorts of areas, right? Like, say it's respecting this, and then it comes and it's like ranges here, right? And then it grabs liquidity. Cool, I'll get a sell even before here because I'm understanding this is breaking the structure, right? But if price just continues doing this, like if it just starts, say price just continues pushing up and then it starts ranging here, I will not be looking for sells here, just because I know that if it is going to grab liquidity, it's going to break and then come down. So these sells are obviously conditional and dependent on market structure. Okay, I'm going to look at some questions now. I feel like I need to leave more question time for everyone. Wow, we have a lot of messages. Yeah, I saw Jack. You caught 102 pips, man. What the fuck? Yeah, I caught 102 pips. I caught exactly 102 pips as well. I made on like a one lot, I think. Made 1K and $20 and $19. I made like a little bit less than you. Cool. Let's have a look. Anticipating fill, yeah, range, blah blah blah. Yeah, Justice, if you come back and watch this, just make sure you have your own analysis, compare it to what I've done, compare it to what Wix is going to do, compare it to what Don is going to do, and learn, right? I don't know how long I'm going to be doing this for free. Like, this is taking up at least like an hour of my day every day. So yeah, ask as many questions as you can now. It's still free, boys. Yeah, Raphael, I can't be bothered, man. If I'm fully profitable in the future, I might buy more candles, but we will see. How do I size my position? So, Ali, what I do is I have fixed sizes. So, for example, I have fixed sizes knowing that I typically have a stop loss for approximately like 100 to 120 pips. I would say that's like the medium average, right? So if I'm understanding that, I want to leave myself room for at least like a couple pineapples. So what I've done is I'm doing like, because I'm on a funded right now, so 5% is my max drawdown limit for the day. So I've separated that into 5 separate trades that I can enter. So I'm using 1% risk for each trade, and the 1% risk is a 100 stop loss, 100 pips stop loss, and I calculate my risk based on that. Yeah, cheers. I'm a little bit ill, but wanted to get this analysis out. 1804 seems to be the support on the weekly. Well, you say weekly, right? Like you say weekly as in like, 1804 right here. Is that really your support? How do you know? What's to say that, your support isn't like actually slightly before and you actually just faked out, right? So that's why you need lower time frames to kind of confirm that. Is the main strategy right now just to look for ranges and enter on fake outs or liquidity grabs? Fake outs are liquidity grabs, right? So you need to understand that a fake out means that price, is going into that direction, but it didn't have either the direction was wrong or it didn't have enough liquidity to drive continuously down to that direction. So what you typically see in terms of a fake out is sometimes you can get a fake out into a second fake out and then it goes in the original direction. So I'm going to draw this like this. So let's say you have a bearish candle, and then this next candle has no bottom wick, right? Break. Let's say this is your range, right? So let's say this is your candle. Cool. That's your next candle. You then close bullish back into here, but let's say this has no top wick, right? A lot of the times this happens, and then you get another one which just continues down in this direction. I'm sure all of you guys have seen this, right? And when you see this, what does it show? This just shows that, you know, you've closed below. The fact that you don't have a bottom wick just means that price is doing this, right? If you open here, gone up, down, here, closed, you've broken the lows, so you've created that kind of structure. And then now you've just created this fake out, right? You've pushed up here, no top wick, so you've created this top wick first, and then you just push down. So what does this look like, right? If you separated this into more candles, this is just more ranging around here, but you broke all the highs before coming down. So this is your fake out, right? This to here, that's your fake out. Does that make sense? Yeah, man. Not sounding great. Sorry, I don't sound that bad, man. Maybe I just need a mic. Yeah, but my nose is killing me. Temperature in London is like fluctuating like shit, man. I'm sure Jack knows. Cheers, guys. Cheers, guys. You meant liquidity, but is that the main strategy? Okay, I don't think the strategy is limited to like. It's knowing when to use what. Like, for example, during this push down that we had on gold for the past like week, right? This massive push down. If we were to look for liquidity, we wouldn't have any sells until you potentially got to these sorts of areas. Right? But even if you were, this daily wick didn't even like break these highs. So you like if you're looking on the daily specifically, you might not have enough liquidity to come down. So it's knowing when to use like liquidity and like entries on the wick and when to use a breakout. Like a breakout is still very valid, right? If you have liquidity, or it's like driving in a very aggressive way, then cool. That could just be, you know, like an indication that price is going to go in that direction. It has the volume, it has the direction, so we're going to take breakouts. You know, so what I drew up just now, Bard, like, look at this. Right, so you've come down, and then you see this, like, basically no bottom wick. You've come back up, you faked out to come back down, right? So you could say this is a smaller time frame liquidity grab, right? You also broke these highs in terms of like a closure. So if you were looking on the hourly, this daily push slowly coming down could have worked. But for example here, right? Let's say for this entire push here, right? Let's look at between here. Actually, no, we can look at like here. Let's say here, all the way down to here, right? Came down, came down, came down. Cool. You potentially could have had a liquidity grab here, but how do you know? This candle had no bottom wick and it was respecting the support, right? You know, it had some level of support around these sorts of areas, or you had like some range around these sorts of areas, right? So is this just respecting the support and it's going to start driving up? You don't know. So it's likely that you didn't probably get into this position here because you didn't have a closure below, right? Once you had a closure below, you had this massive wick down, right? Massive wick down to here. Does that mean, oh shit, is it just going to fake out to come back up? You don't know. So if you were looking for the wick entries, you wouldn't have any positions. You may have had a position here, but at the same time, this also closed respecting, right? And here, like I would say, yes, you've come down and then you started coming up, so you might have caught this, but this entire move, just between like here and here, if you took the breakout to come down to retest these lows, that's 80 pips. So when you say it's not true, it's like, yeah, sure. Like technically, on the lower time frame, depending on how low you go, you'll have fake outs and you have liquidity grabs. But if you look at the general structure, like if you didn't take a breakout here, you would have missed out on 80 odd pips, right? So it's just knowing when to use it. Comments. Oh, okay. So Zay, yeah, I think you messaged me. Sorry, I didn't reply, but it's COMEX open. So COMEX open is essentially what happens at I think at 8:20 a.m. or is it 9:20 a.m.? I think it's 8:20 a.m. And that's basically New York. COMEX is like when people are allowed to start like trading, I think. When the markets open up for New York, essentially, and that's when you get like a lot of volume just kind of like injected into the market. So typically what you see is like if it's going in a certain direction, it'll either push very strongly in that direction, or start going up or whatever. So it's just an injection of volume. There's no indication of price really, because it kind of does whatever. Wick entry, does that mean break of the highs? No. So wick entries are, so for example, if you have these two ranges, right? Say you ranged here. We're looking for it to come down, right? But we need liquidity grab. So it does this. We're understanding that this, when it comes to price, right? And in terms of like actual candles, is just potentially, you just ranging up, ranging down, ranging up, right? And then potentially getting a fake out here, right? Getting a fake out to come down. So if this is your lower time frame chart, your higher time frame chart could be just this, right? You come down, maybe you closed here, but you're breaking below. So we can mark this up like this, right? Your next candle is doing this, coming up, coming down, right? So if that's the case, our wick entry is here. I drew no line. Fuck. Our wick entry is here, right? This is our entry. On low time frame, it's fake out. Here, it's a wick entry, and we're understanding this is liquidity. What other times of good volume? So generally, like New York, Asian is like the start of like, I would say like it's less volume. There is volume, and it depends on what price is done prior to Asian. I would say if New York was a huge push, Asian usually just like consolidates ranges, but those are the kind of times you get volume. So London, Asian, New York. You can kind of say comics exchange, but also like news. So depending on what news prints, you get a lot of depending on the folder. So if it's a very big folder, like a red folder, you'll get a lot of liquidity injected into markets. Anything else that anybody wants to raise? If not, that could be it, guys. How do you differentiate between a breakout and a liquidity grab? So I mean, what we just mentioned here, right? So this, if you're taking the wick entry and liquidity grab, you'd have an entry here. Taking a breakout, you'd have an entry here. Right? So we started taking these because it's just high. Like, first of all, you catch more pips, right? Second of all, with this, even if you're wrong, there's a high chance that price needs to grab liquidity to go up, and this liquidity grab can be anywhere between here and here. So that's why we take those, and when we take these, I would say generally we're looking for a liquidity grab when it's, yeah, this is a breakout to the upside, but we're understanding we're in a very bearish trend, right? If we're in such a bearish trend, the fact that it just kind of spikes up without grabbing liquidity to come to go up, like not enough liquidity to go up, means that it's a high chance that this could be the liquidity grab to come down to grab liquidity to go up. I hope that makes sense. Yeah, let me know if I've explained that well. So what you typically see is this, right? You do this, and if it wants to reverse, it'll do this, right? And this is exactly what we had today, right? If you look at this, and you look at this, price came down, right? You had initial liquidity right here, but if you go into a lower time frame, you can kind of say that like price came down, came back up, started ranging in these sorts of areas, grab liquidity here to grab liquidity down here so that you can start pushing up. Does that make sense? Yeah, we're always in a cycle. Yeah, typically if we're in a downtrend, you're looking for liquidity to continue that downtrend. Um, if you're looking for buys, if in a downtrend, you have to understand what you're trading. So typically if price reverses, right, it's going to do something like this. It's going to come up, grab that liquidity, come down, and you're going to break these highs, do something like this. So if you were taking a buy, you'd understand that you'd either capture this, or you could be looking at potentially something like this if this happens first. Like it kind of breaks a low but not really, and then it kind of like fakes out back in this range to grab liquidity here. These are likely just all fake outs. It's just what time frame those fake outs are in. Yeah. Cool. Guys, I'm gonna have to end it around here. As I said, I don't know how long I'm gonna be doing this for completely free, but if I do this eventually and it's like it's gonna cost anything, it's gonna be hella cheap. It's gonna be like, I don't know, $5 a month or something. Just because I don't want it to be like something that people need to pay a lot for, because obviously I'm not taking any trades, but at the same time, like I want this to be more interactive. So I want to set up a Zoom, I want to put some effort into it, and then have people asking questions and everything. So to do that and fund that, right, and also my time, might eventually make it like a very, very cheap thing. Yo, Janez is here. Yeah, guys, if you guys trade London, check out Janez's stream. He's taken massive W's ever since he started, and there's a lot of knowledge there to learn, guys. Legit. Yeah, honestly, like it's $5 not for like me to make any money, because obviously $5 is not going to do anything for me, right? But it's $5 for me, and like for me to justify that it's like my time. Because if I'm on the charts, right? If I'm on the charts, and I'm trading like a one lot or whatever, you know, if it goes well, I catch 100 pips. That's 1K. Like that $5 doesn't do anything for me. So, but yeah, it's literally just to set up, use my time well, and so on. So yeah, but it's not gonna happen until I would say maybe like November, maybe like end of October sort of time. I don't want to make it anytime soon. So yeah, cool. Yeah, you're trading London. Yeah, check out the streams then. Janez is streaming. Janez, I'm gonna make you mod. Yeah, sounds good. All right, cheers everyone. I will see you guys tomorrow night for another analysis. I will be on the streams for Don's trading in New York, so we'll see what happens, right? Just remember this: make your own, have your own analysis, and compare. Never just take somebody else's trades because they're profitable, or you think they have the right idea. Understand it yourself. You need to have the same idea, and then you enter the trade. Yeah. Cool. Yeah. See you in New York, Janez. All right. Cheers, everyone. See you tomorrow.